Ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com, and this is a Forex Quick taking a look at the New Zealand versus US dollar as we head into the new trading week with the RBNZ interest rate decision. Yes, the RBNZ will meet this week with the expectations that another 50 basis point hike. This would be the fifth consecutive 50 basis point hike. The RBNZ has not done that ever in its history. It will take the rate up to 3.5% from 3.0%. The expectations are for the RBNZ to do another 50 basis points when they meet again in November. That would be the last meeting for the year. That would take the price to 4.0%. with the terminal rate outlined by the RBNZ somewhere around 4.21% in 2023, so just above the end-of-year rate. That's the hope. The problem is that the currency has been on a move to the downside, increasing the inflationary expectations. So there is wonder that the RBNZ will have to move that terminal rate up to 4.5%, maybe at a minimum, if the New Zealand versus US dollar continues to move to the downside and add to the inflationary pressures that has inflation already at 7.3%, well above its target rate. So that's the fundamental backstory that we're going to be taking into consideration as we move into the new trading week. That interest rate decision will be on a Wednesday in New Zealand. On Tuesday night at 9 p.m. Eastern time is what traders can count on in the middle of the night for London traders. So be aware of that. Be aware of that fundamental news. The RBNZ will meet and is expected, largely expected, to raise rates by 50 basis points. So with that backtrack, let's take a look at the New Zealand versus US dollar, understand what the technical levels are in play. And I'm going to start off by taking a look at the weekly chart. And as you can see on the weekly chart, the move to the downside here broke last week below this key lower trend line. This trend line connected a low to a here, here, and here. So a solid level, and we fell below that level, and that helped the price move sharply to the downside, falling below these week lows here, coming in around the 0.58425 and continuing the downside. This week we saw further erosion to the downside, taking out the low price from this week. This week was the week of March 22nd. The low price came in at 0.55829. And as you can see, the low price for the week bottomed at 0.55638. And we are closing, or it looks like it's going to close just above that level. So, getting below the 0.55829 level would be one of the hurdles on the downside if the sellers are to continue its trend to the downside. And once we get below that level, the only thing holding the pair up would be the low price from 2020, which comes in at 0.54668. So you can almost see the inflationary impact from the lower currency down at lowest levels. I think it's on record down from the 2020 pandemic low here. So lots of pressure there, likely to keep the Reserve Bank of New Zealand on the tightening cycle. Now the question is, will that tightening start to lead to a stronger currency, or is it just going to get weaker and weaker as the economy gets weaker because they're raising rates? So sort of this is the dilemma with these central banks that are seeing the dollar move to such high levels. But from a technical perspective, that will tell us the story as far as where if the dollar starts to lose its luster as the strongest currency, and the New Zealand versus US dollar tries to make some headway to the upside. And as we can see in trading this week, off of our low here, this is the low price the week before at the 0.55829 level. We fell below that level but couldn't sustain the momentum. We did see a fairly decent move to the upside on Wednesday's trade. That took the price back above the 100-hour moving average. But this whole trend line here, connecting the low to a low to a low to where we broke here and use that level as resistance, and then reestablish the level of support, and then reestablish the level as resistance. You can see the ups and downs around that trend line. And when the price moved up to that level here and here and here, and then broke above it, that's what the market needed to see to give the buyers more confidence to the upside. but similar to other, like the Aussie versus US dollar, the momentum faded. We couldn't get to the next target at the declining 200-hour moving average. And although the price tried to stay above that broken trend line, once again, the price gave way to the downside in trading here today and or on Friday, and then retested that level, found sellers against the level, and moved to the downside. So incredible how many times the price has touched on both as a support level and as a underside of the broken trend line, as I like to say, against this trend line right here. So that trend line is going to be a favorite next week, that if the price is going to go higher, we need to get back above it. We also need to get back above the 100-hour moving average ahead of that and stay above those levels. Can't have any of these types of breaks anymore. And then once we get above those levels, we need to get above the falling 200-hour moving average. That is the only way that we're going to get this pair to tilt its short-term bias from more bearish to more bullish. And if we can't do that, the buyers aren't winning. The sellers continue to win. On the downside, it's just stay below these levels and the bears remain in control. So there you have it, a look at the fundamentals and also the technicals that are going to control the trading and next week's trading for this currency pair. We'll see how it all plays out. But you're ready to play and you know your levels. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.